following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that Gold Report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Almost everything is more complicated than it seems, but almost nothing is hopeless. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials up 119, NASDAQ up 21, S&P's up 13, gold contract up $16, trading at $1,118 an ounce. Silver up 57 cents at $14.90 an ounce. Platinum up $8 at $9.71 a pound. Light sweet crude up $2.50, trading out at $47.46 a barrel. Bonds 10-year down 4.6, 126.18, 30 off 15, 151.30. King dollar down 250 ticks, 95.53. The euro up 8 at 112, and the yen flat at 120.63. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the S&Ps, let's take a look at them. This is going to be wild coming into the close, and this is why, folks, okay? You have both the S&P futures and the NASDAQ futures. Well, this is the first day that the S&P futures are going after the swing high of the September 9th time frame. 1982.75 is exactly where we are right now. You close under that, that's going to be a failure on price and volume going into that swing point. We go into the NQs. Now, what happened is that yesterday, the NASDAQ futures were the only ones that failed. The S&Ps hadn't made it up to that September 9th level. The NQs, a close under the 1961 would be a failure. Right now, the NQs are at 1966. They've been as high as 1972. The volume's not going to come in. Within an hour, bottom line, eat the SPY here. I'll just give you a kind of a little correlation here. The SPYs, what we've done thus far in the SPYs, we've done 66 million shares. You're going into 149 million. There's no way it's going to happen. In fact, it looks to me like the SPYs are actually going to do less than yesterday. Yesterday we did 113 million. The NDX 100, the Qs, same type of setup inside the Qs. The Qs right now out here have done 19 million. They're going into 47 million. Yesterday you did 30 million. So in both cases, that's not going to happen. The real key and the kicker here is that are you going to get the price? Gold contract. What do we have with gold? Well, we finally get buyers in gold, folks. Bottom line, you get gold start running topside out here today. You have the wide price spread. You have the accelerated volume. Gold right now is trading out at 118. We got to 123. And 123, by the way, if you were listening to the show this morning, that was the price projection. It was 122 to 123. We did 120,000 contracts out here. That's saying that gold is now on its way to 1169. When you take a look at this, what you'll see is that when we came off the bottom in August, you come off the bottom of 1180. You had a couple signs of strength on the 11th and 12th of August. More signs of strength as we went up there on the 21st, 22nd, and 24th. You pull back with lighter volume, then we had no buyers. Bottom line, you get buyers in it again. And we have some divergence, and that divergence is huge too, folks. Where the divergence comes in is that we go over to the, well, first we'll go to the King Dollar. King Dollar can't handle higher price. King Dollar out here, we take a look at it. What that is saying that, guess what, King Dollar, we're at 95.53. That's saying King Dollar wants to run into this 95.27 to 92.85, which was the lows of August 24th. Now, that being said, this is where the kicker comes in, and this is a wicked kicker. We go over to the bond market. What happened with bonds yesterday is this. Bonds got taken apart, folks. In the matter of 6.5 hours, you came down over 2.5 points in the 30-year. The 30-year right now, well, let's do the 10-year. The 10-year yesterday went from a price point of 127.22. We're at 126.17. It broke the whole consolidation that's in. That's saying that the 10-year wants to go to 125.20. The 30-year, okay, got absolutely decimated. The 30-year right now is trading at a price point of 151.28. We're down 179,000 contracts today. When we broke lower yesterday, we broke with 235. That also, it's not an ABC structure down volume-wise. Price-wise, it can very well be. Long-term-wise, what this is saying, the bond market is saying the Fed's going up tomorrow. That's what this is saying. So the divergence goes like this. Bonds are saying the 25 basis points are going to happen. If, in fact, that is going to happen, the divergence is, well, that means that the dollar should be going up, and it's not. That means that gold shouldn't be going up, and it is. We're going to find out 2 o'clock tomorrow afternoon. And the wrap, the whole take on this is that I'm believing the bond market first. The reason being is that bonds have been the most consistent giver of information on this marketplace for years. What very well could be happening, and this would be a fundamental basis. Well, technically, I'm giving you a technical setup, but the fundamental basis is like, I'm trying to wrap my head around how can the dollar be going down, how can gold be going up, and bonds be going down? If you do the fundamental basis on that, what it would mean is this. It would mean that even with the Fed going up 25 basis points, that the rate of inflation, even though the CPI today was down because of energy, it would be saying that inflation is coming in the marketplace. No, not coming, is in the marketplace. And the correlation of metals going up, dollar going down, and bonds going up would be that the rate of interest versus the rate of inflation, inflation is bigger than the rate of interest, so your real rates are still actually lower. It's going to be wild watching this whole thing shake out. 877-927-6648. We're going to take a look at the silver market. This is what do we have with silver. Silver right now had wide price spread, accelerated volume. Silver's in a little rocket ship. It's been a rocket ship both ways. When silver wants to go to hell, it goes to hell in a handbag. Well, guess what? It's not doing that today. We're up 57 cents. You get 48,000 contracts. Silver wants to run to this 1577. You're at 1490. Silver, no doubt, saved itself once again. Dow Industrials up 122. Nasdaq's up 20. S&Ps are up 15. Stay right there, folks. Come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now up 128. You get the Nasdaq up 39. S&Ps are up 13.5. Okay, so let's do some numbers here because this is going to be really cool coming into this close. You know, yesterday what you did is that we were coming into the close, and what you had is that you had the NDX 100 couldn't handle it coming into the close. We are right at the cusp on both the S&P and the NDX 100. So if we first do the E-minis, this is the number on the E-minis, 1982.75. And right now you're dealing, it's over that price point right now. You're at 1983.75. And on the NASDAQ futures, you're talking about 43.61 or 43.67 right now. So you can see both of those bases as we come into this close. They're crucial numbers, man. They're absolutely crucial numbers because what we have happening is that the volume is contracting not from what you're going into on September 9th, folks, or the downdraft. The volume is contracting just from yesterday, which is pretty amazing. So inside the Dow Industrials, what do we have inside the Dow? Strength versus the weakness. This is what you have. It's only 2 stocks that are weak in the Dow. That's Verizon. That's down 16 cents, and Apple is down 20 cents. The leader inside the Dow Industrials out here today is GE. GE's up 62 cents. You have Chevron up $1.59. Exxon's up 140. Coca-Cola's up 56 cents. Inside the NDX 100, strength versus the weakness. The strength is JD.com. That's a wicked dead cat bounce. Well, it's not. It's only up $1.83, but that's been going down forever. Baidu is up $9.21, trading at 150. Win is up 371. That's a dead cat bounce extraordinaire. And then you have Netflix. Netflix is not bad. Netflix is up 459. Netflix is trying to get out of the trading range from August 24th. The top of that range is 109. Netflix had traded down to 93 yesterday. It's up 10 bucks since yesterday. And we'll see whether it can get out of that range. You take a look at some of the higher volume stocks out here. This is what you have. Hewlett Packard is up $1.29. They're laying off, I guess, 30,000 people. Freeport McMoran is up 51. We have Microsoft up 18. We go into the There she goes. We go into the HUI and the XAU, and this is what you have. In both cases, we have some price spread that's happening out here. You take a look at the HUI first, which is the Gold Bugs Index. Gold Bugs Index right now is trading up $6. You're at 110.97. That not only it's inside the range, but that's saying that flat out it wants to run up to 118. We get another day like this tomorrow, and then you get game on for 133.11. The XAU, what you have with the XAU, and what did happen out here, which is pretty cool, is that you had the Gold Bugs Index was under and in a lower trading range, and that came right back inside the higher trading range this morning. The XAU trading at 265. That is on its way. We're at 46.92. That's on its way up to the $54 area. So, you know, there's action out here inside that gold market. If we go look at an Eagle AEM, what you're going to see there, AEM right now is trading. We're trading at 23.52. Thus far, we've done 2.6 million shares. AEM, it was kind of sweet because it's going into 2.4, 2.5 million. Your next swing point up here is 25.07. It will need more juice as it gets up to that level. But, you know, thus far, what we have, you know, inside not only the gold market, but the gold equities, folks, the highs that were generated out here on the 20th and 21st of August, those little babies there, you know, high volume highs, they're going to get tested. And it looks to me that that is what we're getting juiced now to go after. Let's go up and we take a look at the E-minis, because with they're juicing the E-minis right now. It's up $15 as we're talking. E-minis right now, we are at 1985.75, so you're $3 over that. Now, the way that a test works and a bar works, folks, the further that you get away from it. So right now, the E-minis are 3 points away from it. That's not enough. I'm just explaining. The further you do get away from the 1982, the higher the probability goes, no whether it's volume or not, that you'll go higher. So this is going to get really wild coming into this close, because what we have had is that you've had high volatility all week long, which is unusual in the aspect of the Fed meeting. You have commodities that are running out here today. So that would be saying that, hey, you know, they're not going up. Crude oil's up 5.2%. You get silver up 3.9. Gasoline's up 3.4. Heating oil's up 2.7. You get copper up 1. Gold's up 1.4. You know, so you have a lot of these commodities that are running with juice. The kicker again is going to be, where do they end up? Oil market. Let's go over, take a look at the oil market, CLX5, and this was deviant out here today. You had the numbers come out. First oil went south, and then you went north, and it has some juice underneath it. Oil right now is trading at $47.38. You have the juice into it. We've done 217,000 contracts. That's saying that oil now is going to run up to this 50.04 level. Let's just see something. So if we did 38, that'd be $12. That'd be 55. So if this does end up being an ABC structure, 55 is the number. It would have to take out 49.50 with volume. Let's go over to ExxonMobil and see what the Exxon is doing, and Chevron. Exxon thus far, so you got 11 million shares. It's not an ABC. This is what the difference here. So Exxon, well, it still could be. You still could take that 75.98 out with volume. No, it wouldn't be an ABC because, okay, so watch this. Well, A to B equals C to D, price-wise it could, but it's not with volume. This is why. When we came down on the first, it came down with way too much volume. Exxon came down with 24 million. Let me go to Chevron and see if it's the same setup. So if we look at CVX, CVX. Yeah, it's the same. On the first, Chevron come down with some juice. But you know what? It looks like they want to go test the swing highs that were generated out here on the 28th of August. That's the way that seems to be setting up right now. Now, as you come over to TFNN, don't forget, folks, we start live programming 8 o'clock in the morning, go to 8 o'clock in the morning, 6 o'clock at night. You can get all that programming right on your cell phone at TFNN.com. Now, if you do have an interest in the metals market, yesterday was my 699th edition of the Gold Report. Next week, next Tuesday, is my 700th edition, 13 and a half years. We have a promotion going on. You can save 20% on your subscription each and every month for as long as you subscribe. That special is good this week only. Check it out on the front page of TFNN. You can test drive it. You like it, you keep it. You don't like it, guess what? You don't have to keep it. Stay right there, folks. Come right back.
This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 145. You get the Nasdaq up 25. S&Ps are up 15.5. Percentage-wise, you get the Dow up 0.8%. S&Ps are up 0.7. Nasdaq is up 0.5%. We go over and we take a look at some of the Dow stocks. You know what was interesting out here today? FDX, Federal Express, folks. Federal Express came out with numbers. Numbers weren't good. If we take a look at FedEx, this is kind of wild, too, because this is where when you get your head wrapped around a fundamental of what should be happening versus what is happening, it's pretty intense, and FedEx would be one of them. And this is why. So technically, FedEx is set up to go to lower price. In fact, if you have test rode the TAS market scanner, John Logan's scanner, FedEx not only came up, and it came up, and it, even when we were rallying 500 points, FedEx couldn't get any rally going. And so I was looking at this, and I'm saying to myself, man, it's hard to believe, but, this is a short position. Bottom line, I didn't go short the stock, okay? Because I'm looking, I'm saying to myself, I know it had a high volume swing low, but if you take a look at it here, let me show you something. I'll show you where I was looking at. But it's really cool how this works. Okay, so when you look at it, bottom line, it broke down with volume. But then you look at the other side of it, and it's like, oh, it has a lot of support at 149. There's some good juice right up there. And then I looked at the aspect, okay, listen, gasoline rates have gone down dramatically, right? It's got to be one of their biggest expenses. We know that the internet's gone up dramatically, meaning how many people are using shopping on the internet. I'm saying, hey, guess what? I'm not going to go short the stock. Bottom line, they didn't make their numbers. Stock's down $4.50 with volume. And, it's like, wow, this is a trip, man. And I suspect what it is, well, it's probably a few things. There's probably less shopping than we realize. More than likely what it is, however, is that it's probably that a lot of us are using the post office more than we're using Federal Express right now, because for the amount that gasoline went down and the amount that jet fuel went down, because remember, they use their own jets too. So they got their own jets, they got their own ground transportation, but yet they couldn't make their numbers. That's a big number, man. Let's go to Mike in Toronto. Hey, Mike, what's going on?
Hi, thanks for taking my call.
Sure, man.
Could you look at the IBB on the daily chart?
The IBB. The IBB is just
on the daily. This
is the cat with 8,000 lives. Okay.
Yeah. Do you see a cliff dive set up on this?
A cliff dive. When the IBB does like the cliff dive, they're one of the best cliff divers. There's no doubt about it.
Yeah.
The key, of course, is always like, when is the cliff dive going to take place? The IBB.
Well, you got an ascending wedge, right? You've got an ascending wedge, right?
The IBB, no doubt, runs the NASDAQ composite. The IBB's been on a tear on the upside. If you can get it right, yeah, you can do very well. The IBB, however, just keeps going higher, Do I think it's going to fall apart? Yeah, I do.
Yeah. Look at the volume. Look at the volume on the daily.
Oh, listen, man, when this thing falls apart, I can show you, I've got it a couple times and got burnt at least 6 times. So, it's vicious, man. The IBB is a vicious animal. When the last time this really went down a lot, it was in October, February of 2014. It went from 275 down to 207 in 6 weeks. Other than that, you haven't had any, the last retracement is pretty intense. We just went from $400, down to $331.
Could you give me some more downside projections on this?
Yeah, I think that, it looks to me that the IBB wants to run into 330 or 355. That's pretty cool. When we came down, I'm not using, on all these ETF structures, folks, I am not using the swing low that was projected out there. The reason being is I was in front of the screen that day, and yeah, there might have been a couple trades out there, but like I said, at the IBB, did it trade at 284? Yeah, it probably traded there for 100, 200 trades. What I am using is that the following day, you can use that swing low and see how it attacks that. That's 331.70.
Okay, 331.
And what that does, Mike, is that lines up also with the high volume swing low from May 1st, which is 330. It also lines up with 333 of March 27th. So in that area there, it's building cause to go down. Those are 3 high volume swing points. The correlation is 17 million on each one of those versus 9 and 8 million at highs. And excuse me, inside that IBB, you already had one of the major stocks, Biogen, take a deep. That's the only one that, has basically really taken a deep, meaning of the majors. And, when it takes a deep, this baby came up $480 and you're at $319. So you're talking some real bread on the way down, man.
Okay. Okay, so this conference in San Diego, you can just dismiss it? It's not really that serious?
I don't even know what conference you're talking about.
It's an antibiotic conference starting today and going tomorrow.
No, listen, for biotech people, that's a big deal. You know? I mean, but that doesn't mean the stocks have to go higher. Do you know what I'm saying? You know, the core, so watch how this kind of works in the marketplace, which is pretty cool, folks, all right? If the market, has any bullish bias at all, right, and you get conferences and you get, stuff that comes out, the bottom line is that most of the time the market won't go down, or they can really get it going on the upside, right? When markets want to go down, it seems like they can come out with anything and everything, and they just don't move. A perfect example of that is Apple. They've come out with everything on Apple to go higher. Okay? Well, guess what? Apple hasn't moved. And it's just not, when you look at the correlation of what when I say the public relations, it's just not the public relations of Apple. What has happened is that there's plenty of other market players that understand if they can get Apple going once again, that the indices themselves will go, and they haven't been able to do it yet, so.
Not yet. But the volume on the Apple is very low, isn't it?
Yeah. To me, Apple's done. When I say done, Apple's seen its day, meaning, doesn't mean it's an awesome, Steve Jobs changed the world. There's no two ways about that. But guess what? Like anything else, you only go up for so long, then you recycle, you go down, and do it again. And Apple can take a big fall, not a small fall. Apple.
You're looking at like an Eiffel Tower chart?
Well, Apple is at 116. I can see it at 76, 86 pretty quick.
No.
That's not that's easy.
But wait, so Tim Cook's options, what's the strike price on those?
It doesn't even
60?
matter. I don't buy all that stuff. I buy that, can executives push stock out and make money? Yes, they can. Okay. His options are good for what, 2 or 3 more years he needs. He doesn't. The market's bigger than anyone. That's
but Dave White said they're only good for another 6 months or something. He's got to keep it up at a certain strike price.
Okay, I don't buy it. That's all I'm saying.
No?
Yeah.
Okay.
The market to me is bigger than anything and everyone. Okay. You can control the market for maybe all of 48 hours, probably. Cooking brother.
Thank you
have a
very
great
much.
one, man. Have a safe one. Dow Industrials are up 147. Nasdaq's up 28. S&Ps are up 15.5. You stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now up 149, Nasdaq's up 47, S&Ps are up 16.5, and we'll see just how far they can run it into the close, because that's what it looks like it's going to be doing out here. You have, 30 minutes left? Yeah, well, you get 15 minutes left. The number is 81 on the S&Ps, and we're at 86 right now. The number is 61 on the NQs, and you're at 75. So the NQs are quite a ways over that whole area. Let's go take a look at the small caps. We'll take a look at the IWM. IWM right now is trading at, these are the small caps, of course, the Russell 2000. IWM is trading at 116.96. Your swing out there was the 116.41, and you're over it. Bottom line, you get over it. You're at 21 million versus 40 million, but guess what? You're over it. You're over it. You can get into higher price. The QQQs, because what happened yesterday is that your Qs are actually over it. The futures were not over it. So the Qs right now, the number we're dealing with is 106.31. You're at 107.10. 47 million. Yesterday you did 30 million. Today we're at 23 million. SPYs, we take a look at the SPYs. SPY, the SPY right now is trading at $200.38. 199.47 is the number. 149 million is the benchmark, and yesterday was 113, and right now you are at 78. So what is that all about? Well, that's about running the baby up. No one's in the store, and they're pushing the baby out. So this is going to be really wild, because what we do have is that the Fed meeting started today. It goes until tomorrow at 2 p.m. tomorrow. That's where the number's going to come out. Do we have a 25 basis rate hike or not? Now, the 25 basis rate hike just is bank to bank. But what that puts in place is that after 7 years, you have a structure that starts going forward. The last rate hikes, I think, was 94. 94 was the largest one. 94, folks, is a total mind blower. In 94, if you own bonds, and the thing was pretty amazing, too, is that, most folks that own bonds, you don't expect to lose money in bonds. Bottom line, if you have bond funds, and folks, had plenty of bond funds at that point, they got decimated, because what ended up happening is that the Fed not only went up once, they went up, I believe they went up 3 or 4 times in a row. One time was over 0.5% at a clip. They absolutely destroyed the bond market. They put a good downdraft on the stock market, but the stock market, that was a quick downdraft. But the bond market, it was a big number. So if you are in bond funds, those are the things that you have to watch out for. If you own treasuries, it doesn't matter. You hold treasuries, you own treasuries, good luck. And if you're looking to own treasuries, the way to buy them is Treasury Direct. It's one of the best deals out here if you want to own treasuries with zero fees. Okay, if you just go to Treasury Direct, right on the net, it's right off our own treasury. Guess what? You set up an account, you can start buying treasuries right there. You're all set. And if you're going to do that, and we are in an environment that starts going up, ladder them. That's the best way that you're going to, and all laddering means is whether every 6 months you buy, you know, a 10-year or a 30-year, whatever you want to buy. So what ends up happening is that you're smoothing out your curve, and on a continual basis, you have your principal, you have your coupon rate, it comes back, end of story. There's no, you get rid of everything, folks. You get rid of the fees, you get rid of worrying about whether you're going to get the principal back, all of the above, you know. And unfortunately, there's not enough advertising on that from the Treasury Department about exactly how that works, because it is a super deal. It is an extraordinary deal, actually. We go over, let's go take a look at a couple of the silver stocks, because silver, no doubt, had a nice expansion out here today. If we take a look at Pan American Silver first, that had some, and this is always a highly volatile stock too. This little baby, we've done 2.6 million shares out here today. You're up 48 cents. Let me see this for a second. Okay, there she is. Okay, so she's going to go after the swing point. She's going to go after 710. Right now, you're at 680, up 48 cents. We take a look at Hecla. What we have with Hecla, you know, has the juice into it. 4.3 million shares. That swing point is 5.3. She's going to looks like she'll be going after that tomorrow. Great Panther is 516,000. Oh, that's nice. Ooh, okay. So check this out. That swing point only has 216,000 at 42. Okay, that's you know, silver is a wild ride, folks. There's no two ways about it. The ride on silver, whether it's going down or going up, has been pretty extraordinary. Silver had got to lower prices, came down with a vengeance, and you know, that's kind of, well then though, that is how it trades. You know, when this traded on the 26th of August, you went from 1474 to 1395, and you know, that break was pretty serious. We broke down with 35,000 contracts. Today, you know, jumps right back inside, does 48,000 contracts, comes into a swing point. The swing point high is 1495. We hit 1496. We've done it with 48,000 versus 38. What that sets up, it's going to break the swing, go up to 1577. Yeah. What that sets up, when you look at that context, that's saying, hey, you know, that's saying that the Fed's not going up. And as I said a few times, bonds are saying that the Fed is going up. We go take a look at the 20-year, the TLT. What you have with the TLT is, you know, broke lower yesterday, broke with volume, all of the above. And we look at bonds in general. And this is about the most intense one, meaning that how far bonds can actually go down. When you look at the 2-year note, the 2-year note is set up to go down to September of 2014. If that's the case, that's where bonds want to go. Right now, the 30-year bond is at 153.08. Well, September of 2014 is 136.20. That's saying higher rates are coming in. So some of the Dow stocks out here, this is what you have. You have Caterpillar up $1. We have ExxonMobil up 133. Oxy's up 154. You get Big Blue up 85. JP Morgan. Oh, that's what we want to do. Let's go to the financials, because the financials will let a little more information out. So, financials, 9.8 million shares. See, the financials are saying they're not going to go up. It's interesting, man. So, the financials, the swing point is $64.34. Your high swing is 13 million shares, and it can't handle it, you know. Wild, man. XLF, let's go to the XLF. XLF has 19 million shares. Yesterday you did 33 million. You're going into 35. So we'll see. You know, the way when you put that all together, it's really saying that the bond market is not giving good information. I'm going to take the information from the bond market. The reason being is that it's been so consistent for quite a while. This is Tom O'Brien. This is TFNN. Dow Industrials up 147. Nasdaq up 30. S&P's up 1550. 1550. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up $1.36. Nasdaq up 42. S&Ps are up 14. After the close out here, you're going to have Oracle come out with numbers. It'll be intriguing to see how their cloud deal is going right now. Last time they come out with numbers, that equity got hit pretty bad. You went from a price point of 45 down to $40. And right now on the setup, let's just take a look at this. So you got Oracle's at 38 right now. Put this over here for a second. See how this is set up. There she is. Okay, so we take a look at this. Well, she's set up. She's set up to basically try to test 34, 35. You know, now that's on a monthly basis. On an, you know, how it's trading out here today, it's not bad. It's actually pushing this swing point with volume. You're doing 16 million versus 19 million, which is pretty good, by the way. That's on the daily. Take a look at the weekly. Yeah, weekly doesn't have it, and the monthly doesn't have it. This will be cool to see how this one shakes out. Because what you did have, as the rest of the market did have, that October 14th swing low is sticking out like a sore thumb. That October 14th swing low of 2014, rather, was 35. Stock had gone all the way up to 46, and guess what? Comes all the way back into that $35.14 area. So regardless of where Oracle is after the closeout here tonight, it's all going to be about that Fed tomorrow. Because the correlation, of course, will go, if the Fed doesn't go tomorrow, is the talk going to be then, okay, are they going to December? I think most people figure, hey, you're not going to go in December. You don't go tomorrow. I think most people are figuring that, hey, guess what? We're going to be in the middle of 2016 before this Fed goes at all. And I guess another side of that would be if they're not going, are the rates ever going to end up going up? And again, by the way, they don't have to. In Japan, they didn't go up for. In fact, they still haven't gone up in Japan. When you look at the bond structure, so this gets really crazy. When you go to when you go to Japan, the 10-year, to borrow the 10-year, it's, oh my God, what is even that number? It's 1/10 of 1% for 10 years. That's the rate, and we're at 2.2. That's about as intense as you can get, So when you go around the world, our rates are still high. Well, Brazil's been getting whacked, but the real in Brazil has been getting whacked. There's no doubt about it. Brazil is at 5.6 right now. The inflation rate in Brazil is running at 10% though. Colombia's at 4.2. Mexico's at 3.6. Europe is still really very inexpensive. United Kingdom's at 1.9. Germany's at 0.7%. Italy's at 1.9. Spain's at 2.1. We're going to be higher than all of those very quickly if the Fed does raise 25 basis points tomorrow. And just so you understand, when the Fed raises 25 basis points, they're not raising the rates of the treasuries. What they're raising is the bank-to-bank rate. What that does correlate into ASAP, however, is the market raising the rest of the rates. And what happens there, of course, is that you have lower price, higher yield. That's how that thing shakes out. As we come into the close, excuse me, folks, in the indices, what you have is this. Volume, we're going to do about maybe 750 in the NYSE, and it looks like we're going to do about 1.7 billion in the NASDAQ. Dow Industrials up 147, NASDAQ up 31, S&P's up 15.5. Stay right there, folks. We're going to be coming right back with some numbers for you.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
I am, thank you. I was really just commenting on the fact that I'm really enjoying the new format with you being there when the market's still open. You've assembled a great group of people. They're all great technicians. I'm just so glad that I first talked to you on the radio with your little tiger growl. I'm like, who is this guy? And it got my attention, and it's really made a positive change in my life.
You're awesome, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always have a plan and believe in it. Nothing good happens by accident. Market-wise, let's take a look at it out here. We had the Dow Industrials close up 140, NASDAQ up 28, S&P's up 15.5, gold contract up $17.10, traded at $1,119 an ounce. Silver up 56 cents at $14.89. Platinum up $9.78 at $9.72 an ounce. Copper up 2.5 pennies at $2.45 a pound. Light sweet crude up $2.54, $47.55 a barrel. Bonds, 10-year down 4 ticks, 126.18, 30 off 13 ticks, 152. King dollar down 305 ticks at 95.48. The euro, excuse me, folks, up 18 at 112.87, and the yen at 120.57. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We start with the SPY. The SPY is over the swing point from the 9th. Don't have the volume. Bottom line, it got over it. The futures got over the 1982, and that sets up, guess what? You can get higher price. We did volume today of 94 million. Didn't even make it to yesterday, which is 113. You're going into the swing that was generated out here of 149, and you're going into the downdraft of 346 million. So what that says, folks, is you've come into the swing, you've held price. That means tomorrow at 2 o'clock, yeah, you can get higher. My take is that we're not going to hold higher, but you can get higher because you held price. NDX 100. What do we have with the NDX 100? Same type of setup in the NDX 100. Yesterday, the future failed at the swing point. Today, it closed over the swing point. The Qs today did 30 million. They did 30 million yesterday. Going into 47 million and going into 97 million. After the close, you just had Oracle come out with numbers. Let's go take a look at Oracle right now. Oracle closed at a price point of 38.27. It's trading same price, 38.23. They made their number by a penny. However, the revenue was lower. The estimate was 52 cents. They made 53. Their revenue was down. It didn't make it on revenue. Gold contract. What do we have with gold? Bottom line, you finally had buyers inside the gold market. This is what you had out here in gold today. Gold is trading at 1119.90. We did 122,000 contracts, big numbers. Gold now is on its way back up to its swing point, which was generated out here on the 24th of August, which was 1169.80. The thing that's amazing, of course, is that if you remember where we were on the S&Ps, and this correlation is going to get really interesting because what we had, folks, is that when the S&Ps, when the market was breaking down, that was one of the first times that gold was going higher as the market was breaking down. So we'll see where this shakes out tomorrow at 2 o'clock. The reason I'm saying this is that where the divergence is the bond market. The bond market is saying rates are going up. The gold market, I can make, the assumption that the S&P wants to go down, but the dollar index is saying, guess what? If we take a look at the dollar index is saying the rates aren't going to go up because you have the aspect that the dollar wants to go to lower price. So fundamentally, my take on, meaning fundamentally, the way it normally works is that if rates go up, the dollar would get stronger. As I brought up last hour, as I brought up this morning, that correlation could get skewed or is skewed if, in fact, the inflation rate is higher than the net interest real rate. Then, yes, you could have bonds lower, you could have dollar lower, you could have metal higher, you have S&Ps lower. So all of that is in play out here at 2 o'clock tomorrow afternoon, for sure. Now, there we go. Okay, so now let's take a look at the bond market. We start with the 10-year. 10-year got taken apart yesterday. Wide price spread, accelerated volume, all of the above. Continued lower today with volume. Did 960,000 contracts today. Yesterday you did 1 million contracts. Bonds are going lower. That was the 10. 30-year, we take a look at the 30-year. Same setup in the 30-year. 30-year really got taken apart yesterday. It was down 2.5 points. You're down another half a point today. That's $3,000 per contract in 2 days. 30-year, bottom line, we're at 151. That wants to run down to 145. On the short-term basis, on the longer-term basis, folks, what you have there is that the bonds want to run down into 136. Now, when you take that into consideration. It's like, okay, man, even if the rates don't go up and bonds want to run higher, what is that going to do to the market? XAU, HUI, all of the above. You had the wide price spread. You had the accelerated volume, all of the above. The XAU right now up $3, $47.31. That's making a run for 54.74. Gold Bugs Index. What do you have with the Gold Bugs Index? Gold Bugs Index up $6.94. You're at 111.91. That wants to run up into the 133.11 area. Some of the high volume stocks you had in this low volume market, because that's what we had out here today, goes like this. You had GE up 63 cents. Hewlett Packard was up 136. Hewlett Packard laid off. They're going to lay off, get rid of 30,000 people. Sad but true. Netflix was up 492. You had ExxonMobil up 144. Microsoft was up 33. Intel was up 4. Some of the Dow stocks. You had American Express up 82. Big Blue was up 88. In fact, if we look inside the Dow Industrials, this is what you have. Strength versus a weakness. There was only one stock that was negative inside the Dow Industrials today. That was Verizon. It was down 18 cents. The leader was GE. That was up 63 cents. Chevron was up $1.85. ExxonMobil was up 144, and Coca-Cola was up 66. Inside the NDX 100, this is what you have: weakness versus strength. Weakness was Avco Technologies, down 243. BioMarlin was down 279. You had Vertex Pharmaceutical down 179. The leaders, JD.com, that's a big dead cat bounce. That's been going to hell in a handbag. That was up $2 at $26.99. Baidu was up $8.99. Netflix was up $4.92. And Wynn was up $3.43. Wynn also a dead cat bounce. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials up 140. NASDAQ up 28. S&P's up 18. Coming right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of TFNN, in the world of metals, folks, as you come over to our website at TFNN, yesterday I had the 699th edition of the Gold Report. Next Tuesday is the 700th edition, 13 and a half years. If you're interested in the metals market and you want to get a great newsletter, this week only, you can save 20% per month on the newsletter for as long as you subscribe. It's right on the front page of TFNN. That's our special for the 700th edition. And of course, we hear this all the time, meaning how fast time actually flies. And I always say, yesterday's gone, tomorrow's not here. What are you doing right now? Well, make sure you do have a good time, folks, because it blows my mind that it's even 13 and a half years ago. And I remember the first day that we were doing it, and I want to say a nice big hi to our man, Mr. Dale Petz, because Dale and I was putting that together on a sad day. I remember sitting in the office doing it, and Dale was, he's an extraordinary person, number one, but his graphic abilities are just amazing. And he helped me tremendously getting that whole thing going, putting the charts together, making sure that the thing was presentable. So I really want to thank him for a lot more than that. But the bottom line is that it's wild looking back and just realizing, man, how fast and furious the whole thing revolves right in front of us. Let's go take a look at Oracle. Oracle just come out with numbers, and it doesn't look like there's much movement on the stock. Oracle closed at the price point of $38.27. Right now, I believe she's trading right at the exact same amount here. Let's see. So, well, no, she's $38.02. No big deal. $38.02. That's where we're at right now. If we take a look at what Oracle is saying, Oracle's first quarter revenue fell short of the analyst projections by a slowdown of the software license sales amid a shift to web-delivered cloud products. Revenue in the period that ended August 31st fell 1.7% to $8.45 billion. Costs were 53 cents a share. Oracle, of course, is trying to go from a service over the internet to right into the cloud. Let's see, Oracle shares slipped. Let's see, net income for the first quarter declined to $1.75 billion or 40 cents a share from $2.18 billion. Bottom line, still in 90 days. That's pretty amazing, isn't it? So we'll see where that whole baby down a couple bucks is not the end of the world for Oracle. That's for sure. What the market's going to be all about tomorrow, no doubt, is going to be all about the 2 o'clock announcement. What is going to get intriguing here in the gold market is this. If we take a look at the GLD, now let's take a look at this GLD. So watch how this works, folks. So the GLD today goes up 141. You're trading at a, let me see, there we go. You're trading at a price point of 107.31. Now, the way the GLD works is that when the GLD first came into existence, what happens, of course, is that the GLD holds physical gold. So this is always the chicken and the egg. First comes into existence, guess what? People are buying the GLD. The GLD, which is the Street Tracks Trust, which the trustee is State Street, okay? Bottom line, well, they have to buy physical gold. As gold was going up, you heard the promotion out there that's my son's voice. You know, when we got into gold at $282.50, okay? Bottom line, you can imagine, as gold's going up, the GLD continues to buy gold, physical gold, to back the GLD product. That's fine and dandy all the way up. As you start coming down, what happens? It's vicious. Why is it vicious? Because what ends up happening, as gold goes down, the GLD every single day has to sell. As the GLD sells, guess what? They're selling gold into the marketplace. This puts more supply in the marketplace. Guess what? You got to find a buyer. Okay, that being said and done, the GLD today goes up $1.07. We're at 121. Well, the net asset value goes up also. And the NAV, you know, had a nice acceleration. You know, we went up from a 105.93 to 107.24 today. Now, that won't necessarily say that the GLD has to buy tonight. You do this again tomorrow, they'll be buying gold. What ends up happening then? It puts more nice pressure in the physical market in order, and this is where the acceleration on the way up is dramatic. We go over to the silver market. We take a look at silver. SLV, same setup. You take a look at the silver market, and this works the exact same way, by the way. The difference is there's silver. There's always more silver, but what also happens is that the silver market is so much more volatile than gold. It's amazing. So the SLV today went up with 7 million shares. The SLV, which is so cool, took out the swing point of 1428. We go to 1429. Gold did the same thing, took it out with volume. The difference being that silver had even more volume. We did 7.7 million shares versus 5.3. So silver's set up, the SLV set up to run up into the 1491 area. Now, what ends up happening with the Silver Trust? Exact same type of setup, okay? You know, that is the same setup. It's actually, the reflection of that price has to do with physical silver. So in silver's case, you get one more expansion like this tomorrow. Same thing. You're going to see the same thing come to fruition, meaning that's going to put pressure in the silver market, on the silver market for a higher price. We go over to the crude market. Crude oil also went topside today. Crude did have the price spread, did have the volume. We did 221,000 contracts out here. That's saying crude's going to go after its swing high. Swing high in crude right now is $50.04. Now, if crude has more volume, so today we did 221,000. You do 221,000, we go after that swing point. Crude's an ABC structure on the way up, going into the price point of $55. If we go over to ExxonMobil and Chevron, both Exxon and Chevron now need more volume. They had nice price out here today. We did 15 million on Exxon, up $1.44. You know, bottom line, it needs about 18, 19 million. You know, but that can get it pretty easy. You know, the swing point's pretty close on Exxon. We're trading 74.30. That price point is 75.98. And Chevron's trading at, let's see, Chevron's trading at 79.02. That price point we did, see, Chevron had some juice. This is interesting. Chevron had 12.4 million. She's going to need, she's going to need a lot more, actually. She needs 23 million. That swing point there is 81.20. But the way that both of them are set up, they're going to at least test the highs of the expansion on the way up. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials closed up 140. NASDAQ up 28. S&P's up 18. Right back, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go over and we start. We'll look at the XLE. The energy and the financials. If we take a look at the XLE first, the energy sector, this is what you have inside that energy sector, because we did have oil move with some velocity out here today. The XLE up at $1.80, trading at 65.32. Volume out there was 17 million. So it looks like that also wants to go after the 66.86 area. Now the difference being is that has 36 million shares. So, man, you're going to need a lot more volume in order to get into that area number one. Now, the supply line on the breakdown is really dramatic also. That baby is laying out here. Well, it's not that bad. It's 25 million. So it's actually not that bad. 36 million is heavier than the actual supply line. Now, the XLE, of course, was on a one-way trip down. The XLE traded in May of this year at 83 bucks. It was a straight line down to 58. The XLF, the banking structure. Now, the banking structure is going to be is important to look at. Why? Because if we go up in rates, the banks will make more money. It's not like they don't make enough money now. The bottom line, your swing point on the XLF, September 9th, 23.54. We're at 23.55. We're over it. We did less volume. Bottom line is that you're over it, though. So that's saying that the banks want to run to this 23.78 area. We'll see whether at the 23.78 area, if in fact we're going to get any juice. So big number out there. There's no two ways about it. We go take a look at Big Blue. Big Blue is still having a hard time getting out of its way of the 24th. Big Blue today, 2.7 million shares traded. You're up 88 cents, and you're going into 3.4 million, and you're going to 7.3 million. That's a heads up that it still wants lower price. We go take a look at Walmart. There's something wrong with Walmart also. You know, the amazing part about Walmart, of course, is that, you know, it is the largest store in the world, and, you know, this thing got killed and can't get any traction. Until Walmart gets out of $66.16, that's saying it still wants lower price. We go take a look at, now, okay, let's take a look at GE. GE was the leader today inside the Dow Industrials. That was putting the juice inside the Dow. GE was up on 61 million shares. That's saying it's not bad, by the way, okay? That's saying that GE wants to go after, let's see, you got one swing point at 26.21. Put this on a weekly. Okay, so the next stop is 26.24. And on a weekly basis, it's still anemic, but that doesn't mean that I can't get up to that level. We take a look at this on a longer-term basis. There's still zero traction. You know, on a longer-term basis, GE still wants dramatically lower price, which is pretty wild, actually, because when you think of GE is absolutely one of those stocks that when you think of a stock that, you know, should be at highs, is at highs, all of the above. You know, GE's been a dog for a huge amount of time. You're talking years here. The high of GE was in 2000 at $55. You know, GE did two separate legs down to $5.60, $5.80. It's almost hard to believe, you know, because they of course they still have a great name, but bottom line is that trouble in paradise. Now another trouble in paradise out here is Coca-Cola. And, you know, Coca-Cola's been on a downdraft for quite a while. Coke had juice in it today also. It was up 65 cents, 22 million shares traded. You know, Coke's going to go after his swing high. Swing high up there is 39.47. That's on a daily basis, you know, but on a longer-term basis, it looks to me like that $45 high looks like it. I suspect that's going to be a high in Coke for quite a while. The reason being, so watch when you see this. This is pretty amazing what Coke did. The Coca-Cola made its first high in 1998. Yeah, 98. So check it out. 1998, folks, Coke is at $44. It takes 5, 6, 7 years, gets down to $19. It's $19 in 2004. Does one expansion up in 2008 and gets to 32, comes back down to 18 rather. Does the expansion up and can't handle the price. Now, the amazing part, what do we get? 98, so you're talking about, what, 17 years. Took 17 years to get back to the high, and then you come off the high with volume. Let's say it wants to go lower. Now, the cool thing is this. If you heard Warren Buffett, he was explaining that they were asking about stocks. They were asking about where stocks could be, you know, in the next month, 2 months, 6 months, 8 months, a year. And this is what large managers do all the time, folks. And it's hilarious to me, but this is what they do. They always claim that, oh, I don't know where stocks are going to be in a year, you know, 6 months, a year, but I know where they're going to be in 10 years. In 10 years, they're going to be higher. You know, and when I heard him say that, I says, you know what? That's not even close, okay? Why? Well, there's the perfect fact of it, okay? I'm sure if the same thing was said in 1998, especially about Coca-Cola, this is the thing that's amazing, or GE, it would make sense. I absolutely understand that on a fundamental basis, it would make sense that they are higher. But guess what? On a factual basis, they're not, okay? So it's really wild listening to what the mantra is versus what actually happens. Now, that doesn't mean that a Warren Buffett doesn't make money on a continual basis. What that means is that you should start paying attention to what is said versus what happens in the marketplace, The difference being that when you have a strong hand like that and, huge amounts of money in preferred shares is a whole different ballgame, because on preferred shares, you're getting paid interest, you're getting them cheaper, and many times they have to buy you out. That's a different ballgame than you and I going in the marketplace saying, okay, hey, this is a great stock, this is going to go higher. Bottom line, you can actually take apart the Dow Industrials, and the only stock that is still left in the Dow Industrials from the original is General Electric. If I take General Electric and I put that back 30 years, General Electric is trading where it was trading in 1997. That's where it's trading. Okay, so bottom line, word to the wise, just because if you're going in for a longer term deal, still pay attention. Don't think just time will save you. What time does do is that most of the time, between long periods of time, as long as you want to collect your money and get out, you're going to be able to do that. That's what it does. Most of the time, that's what it actually does. We go take a look at the futures market. What we had out here in the futures market today is this. Live cattle was down 2%. You had natural gas off 2%. Wheat was down 1.3%. Corn was off 1%. Both wheat, corn, and beans, they've been up dramatically. Beans were actually flat out here. The movers inside the commodity market, oil was up 5.8%. Silver was up 3.9%. Gasoline 3.7%. Gold 1.5%. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 140. Nasdaq up 28. S&P's up 17 rather. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We had the Dow finished up 140, Nasdaq up 28, S&Ps were up 17 percentage-wise. This is what it is. Dow was up 0.8%, S&P 0.8, Nasdaq 0.5. Over in Europe, you had the FTSE up 1.5%. DAX was up 0.3%. In Asia last night, folks, the Shanghai was up 4.89%. The Hang Seng was up 2.3%. Nikkei was up 0.8%. The Shanghai bottom line, folks, was pushing into lows. Up 4% doesn't mean a thing in Shanghai because it's been down so dramatically. Let's go to Max in Fort Lauderdale. Hey, Max, what's going on?
Hello, Tom.
How you doing, man?
Are you using your car or your canoe these days?
I love it. I'm using my car.
I just wanted to think what you thought about the Chinese market. I guess you don't think it bottomed. What do you think about Baidu?
Okay, so let's take a look at it. Let's go over to the Chinese market first. Okay, so we'll do both. Okay, because there's no doubt. The expansions and contractions are dramatic. There's no two ways about that. So if we look at Shanghai first, Shanghai is trading was up 147 points last night. We put this. Okay, so the low in Shanghai, folks, is 28.50. Last night you went to 29.83. Start going topside. Now, what you did, this is so cool, you did 27 billion shares. Well, 27 billion is going into 43 billion, goes into a downdraft of 46 billion. So that there is saying, bottom line, you're not finished on the way down yet. And what does happen, so that's technically. Fundamentally, folks, what happens is that if you want to short a stock in Shanghai, bottom line, they'll hang you, okay? They won't hang, well, it's an exaggeration. They won't hang you, but they'll put you in jail, okay? What happened today in Hong Kong was that JP Morgan, Credit Suisse, they came out and Bloomberg got a, let's see if I'll get this for you. So, because this is a neat deal. This is pretty interesting. So here it is. JP Morgan stops China's synthetic shots after a regulatory crackdown. What you can always do, folks, is that these large broker deals and banks can make a synthetic shot for you. Well, JP Morgan stop offering them today. Credit Suisse stop offering them because the bottom line is that, they don't want them screwing with their markets. Now, that being said, what that says is that China still is not done on the way down. If we go over to Baidu.com, we take a look at Baidu. Baidu is the largest mover today in the NDX 100. I still wouldn't be biting here. Baidu looks to me that it can not only go down, but it looks to me like it's going to be pretty dramatic. I mean, we just came down from 251 to 150. And every time I look at this, it's like, man, is this thing really going to, go down to like $51? That's what it looks like. I don't know why, but that's how that's set up, man. So it's dangerous.
Thank you.
Okay, man. Have a great one. Have a safe one. And when you look at Baidu, folks, okay, and 51 it sounds insane, and it is insane. But stock get down to the last time where they had volume. It's just a matter of when they do it. And, on Baidu.com, this thing actually, the last time it had any volume in it at all, meaning that, so picture you get a supply and demand curve. If stocks go up, fundamentally they have to make money, more people buy them. When you're pushing stocks up and no one's in the store, when they fall apart, it's extraordinary how they fall apart. Well, Baidu.com, is one of them. It's a one-way trip down $100 thus far, but that when I look at it, it's like, man, the last time there was any juice on this was $42, and that's pretty intense. That's saying that, guess what? There's a lot further down that can go. When you take a look at those China markets, well, here, now let's go to Hong Kong. We just went Shanghai. If we go to Hong Kong, and Hong Kong is traded up 511 points last night. bouncing along the bottom. That did volume of 2.1 billion, but that's still going into 3 billion. Hong Kong is also going to need more volume. Now, Hong Kong can trade up. We traded up 500 last night. That can get to 22,800. Which is, that's another $700 on the way up. But you got to remember that Hong Kong just went from 28,500 straight down to 20,500. So it went down 8,000 points. Yeah, 8,000 points. That's pretty intense. That's 25%, right? Yeah, 8, 16, 24, 32. It's more than that. It's more than that. That's intense. Now, and at that level, so the stocks in here, let's go back to Baidu for a second. Let me show you something. So Baidu also, so that's technically. Fundamentally, Baidu, you're paying 37 cents for each dollar of earnings. So if you're doing that, there's no problem doing that as long as the equity is growing by some percentage of that 37 times 1. So let's picture the S&P right now is trading about 15, 16, 17 times earnings, which, by the way, is huge. You can make the case, though, that's 37. You can take, $15 away from it and say, okay, are they growing by 12.5%? Yeah, they are. There's no doubt about that. In fact, Baidu's growing by, cash-wise, they're growing a lot more than that. Let me just see. I forget what it is, but they're definitely growing more than that. So they're growing by 50 million to 67. Yeah, they're growing by 27. They're growing by, Baidu is growing by 50%, cash-wise. Last year they took in 49.1 billion. This year they plan on taking in 67 billion. Last year per quarter they were taking in 9.5 billion. First quarter they took in 12 billion. Second quarter last year they took in 12. This year 16. So they're certainly growing cash-wise. Their revenue, 50% of it is from China. 50% of it is outside. On a 3-year projection. Interesting. Okay. So on a 3-year projection, they're going to try to basically make more money outside of China. That's how that thing is shaken out right now. We go take a look at. That's interesting. Okay, so let's see. Herman Miller. So let's take a look at this. ML. And the only reason I know what Herman Miller is that they make some great chairs, folks, office furniture. Their chairs are phenomenal. In fact, I think I'm sitting in one right now. Herman Miller, they design, manufacture, distribute interior office furniture. The low is $26. The high is $32. It's trading at $27.86. That is trading at $29.82 right now. And this is what they're saying. Okay, so they made 56 cents. The estimate was 46 cents, so they made $2 over. Net sales were 565 million. That's 10 million over. That's a good number. The estimate was 555 million. Their orders have accelerated, yeah, because these Herman Miller's. It's a high-end maker of furniture. So you basically have to order it. The 517 million was the estimate of orders coming in, and they're doing 563 million. So that's almost 10% over. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go over and we're going to take a look at CBS. Okay, so this baby, folks, okay, we're trading out CBS. I just want to show you something because this is really cool. Understanding how this works. We're at $43.58. Now, CBS, okay, and in fact, any media property right now, folks, when you look at them, bottom line, they have some heavy problems inside them. CBS has just gone from a price point of $68 down to $43. Now, this baby looks like it's going to go down to $27.90. The intriguing part about this has to do with, in fact, okay, let's look at Fox next. 1 second. Put Fox on here. So if we take a look at Fox, Fox is trading out at a price point of $27.07. Bring this back. Same type of setup. Fox is broke down off its high from 37. You're at 27. And, this thing also wants to get down to 15. Now, watch. This is crazy, what has happened here inside this election cycle. And what it is this. We have the big debate again tonight. And normally what would happen is this. In fact, it's so crazy. We're in, the entertainment business, the radio business, the TV business, all of the above. And if you're ever going to buy a radio station or do a long-term lease in one, this is always the time you want to do it. The reason being is that, we had the station, we had the premier station, folks, in Nashville, New Hampshire. That was the station that every single presidential candidate always came to. Inside the station, you have pictures of Kennedy, Eisenhower, every single one of them. Because the bottom line is, this is what ends up happening. On the presidential election cycle, the amount of checks that come in are astronomical. They're over the top. And what happens with the election cycle, the way this works, is that candidates cannot advertise without sending them money first. So what ends up happening is that Federal Express delivers every single morning. Okay, so it's a field day. So going back a year ago, I was saying to myself, oh man, I'm saying, I'm not going to get involved in that station again because it's a 24-hour deal. That being said, I was seeing about the amount of money that was being raised. The amount of money that's already raised this year, folks, is bigger than anything. But guess what has happened? This is crazy. What has happened is that all the candidates don't want to spend the money right now. They normally would have ads everywhere. And the reason we don't have the ads is that because Donald Trump is getting all the publicity for nothing. And the rest of the candidates don't know what to do. And so the stations themselves, okay, are in a quandary. And the candidates are in a quandary because no one wants to basically go against Trump, because bottom line, he has nothing to lose. And they have, well, you get the gist of it. That's politics, okay? But my gist here, and this is what's really crazy, is for the amount of money that has been raised. And, I love the idea we don't have 8 million commercials, but that's what's going on right now. So it's going to be intriguing tonight watching, will someone basically try to take them down? Will and there's no doubt what happens is, CNN is making money. Now, the way CNN's making money is CNN's making money because they have more listeners, because they've followed Trump more than anyone. And so that they can sell more listeners on a longer-term basis. They'll make money tonight. But overall, all the stations are making a lot less money because no one wants to blow their money because Trump will continue to get free publicity. So these stations, CBS, Fox, they're all pulling their hair out. Believe me, it's pretty wild. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right here tomorrow. Go get them, folks.